Good afternoon, everyone. Today is Friday, October the 3rd. It is 2:35 exactly on the East Coast. Sorry, I'm a little late today. My car battery died this morning, so I spent the morning trying to get that fixed. So anyway, here we are. Might actually be good that I waited till midday. Got about an hour and a half till the close. And let's see what's going on. It looks like the market heading into the weekend might be doing some profit taking. Maybe he wants to take a break. We shall see. I got a lot to talk about today, so a lot of requests came in too, so I want to cover all of those. So first, let's go take a look real quick at the 10-minute charts, and this will be a little different since it's later in the day. We'll see what it looks like as we get near the close. So what you'll first see is the market started off really nice and strong in the beginning, all the way up until right about noon time, and then just sort of fell off a cliff. Trying to recover now, but looks like it's heading back down again. So we'll see what happens. It looks to me like the market finally wants to take a break, starting to head lower. Technology down, discretionary. These are the aggressive sectors. In general, they're down. You can look at the whole week from this vertical line back here. That's the whole week. And very quickly, I'll go through the defensives. Defensives actually are starting to go up. So there's rotation into the defensive areas. Even staples is up a little bit. The cyclicals, financials, they're actually moving up as well. Industrials, materials, so they're all kind of going up a little bit. So the rotation looks like it's out of, really it was technology driving the whole market for the last couple of weeks. So it looks like there's some rotation or profit taking out of those. Here's growth versus value. These first two really tell you what's happening under the covers. Rotation is out of growth and into value. That's usually happens. And this is only a 10-minute chart, so it doesn't really mean that anything's going to crash. We're still pretty far up for the week, but it looks like as we head into the weekend, Wall Street wants to hedge their bets, capture some of those gains. They're moving out of growth and into value, moving out of discretionary and into staples, starting to move out of technology. Semiconductors are hanging in there, and transports are going down a little bit. And then if we look at the breadth actually is still moving up for the S&P. So that's actually good. Could mean that it's not really moving out of the market, just moving to different sectors, just some rotation going on. And the Russell looks pretty good today too. So the Russell is outperforming the S&P today. Mid caps and small caps, they're the ones that are actually going better than the S&P. Here's the mid cap breadth moving higher, small cap breadth moving higher, and the NASDAQ, same thing, kind of moved sideways at the open, sold off, and now trying to make a comeback. Right now, actually advancers and decliners, and the volume is okay. It doesn't look too bad, and the VIX doesn't look too bad either. So I think this is just a temporary pullback, probably a healthy pullback as we head into the weekend. It'll be more important to see what happens next week as we come out of that. All right, let's go to the dashboard real quick and see what's happening. Equities, there's the Dow. Dow is actually looking better than most of the others. S&P 500, there's the run up and then the pullback, but really not too concerning. The VIX is still below 17, so that's good. The 10-year is moving higher, and the dollar is basically down slightly, but pretty much flat. Gold is up. Silver is up. I'm going to show you something about silver here in a minute. And oil is up a little bit too. Crypto, Bitcoin up again today. 22,000 now for Bitcoin. Ethereum kind of flat on the day. So it looks like Bitcoin is outperforming Ethereum today. Solana is underperforming all three of them. If we look over here, this tells a story, the sector summary: utilities, healthcare, financials. Utilities is one of the most defensive areas. The bottom of the list are communications, technology, and discretionary. Those are the three aggressive sectors. So that shows you the rotation right there. And the ones that are advancing, the green ones here, actually look at the ones that are declining: technology, materials, discretionary, and communication services. Those, other than materials, those three are the aggressive sectors, and they are actually declining. So there's rotation. That shows you the rotation right there. Let's go down here and real quick take a look at the top 10 lists. These are the top 10 lists that I do every weekend, and you can see quantum computing is doing really well today. So that's where the money is heading into quantum. You can move, buy some quantum stocks and do really well today. Here's Cypher, one that somebody asked me about earlier this week. IREN has been in the top three, all three of those top lead. Rocket Lab continues to move higher today, looking pretty good. 2 down, Shopify, getting a nice bid. Clean Spark actually has a shooting star candle at the end of the day. Here's another quantum stock, IonQ. Look at the bottom of the list, Roblox. Roblox is not looking good at all. Big gap down on Roblox. Celestica. It's interesting, the ones that are at the bottom today. Big red candle on Celestica. Palantir, third from the bottom. Big red candle there. HIMS, big red candle. Wynn Resorts, Solar Edge moving down. Uranium moving down. Rambus, that is a semiconductor stock. Go 3 down, and Upwork is going down. Carvana, big red candle. Cloudflare, big red candle. Zepp Health, which is one that has been right at the top, been near the top for quite a while, actually. That doesn't look too bad, but some of the ones that have been really strong are actually the ones underperforming right now. So if we look at the S&P right now, it is a spinning top. That is indecision and often a reversal. The Russell 2000 is a shooting star, often a reversal. You can see there was one right here. And Bitcoin actually continues to outperform. So Bitcoin is still looking pretty strong. It's getting right back up here to the resistance level. So that is going to be a key level to see if it can break through that, or if it holds and starts to move back down. All right, that's what the market looks like. Let's go look at a couple of stocks that people ask me about. First, I'll try DraftKings. DraftKings is definitely has been selling off. Don't know what the reason is, but from a technical perspective, all the moving averages are heading down. So that is a downtrend. You can see it back here was in a squeeze, but the squeeze implied that it probably would fire to the downside because momentum was heading lower. You can see as the price was going higher, momentum was going lower. So that is a negative divergence, bearish divergence. The ADX lines crossed back over here. So all of this was telling you with DraftKings to get out somewhere in this area. And definitely when it went below the 21, that's what I usually look at. But then when it closed below the 50, for sure, that was the time to get out. So that would have been back here at about 44. And right now it's at 35. So about $9 down. If we look at it on a longer term, DraftKings has been up and down, very volatile stock. So this is one to trade. I would not necessarily call this one to hold for the long term. Right now, I don't know where the bottom's going to be. It actually has a shooting star candle right now, which means it could continue to go down, but it's very oversold right now. But huge volume. The last 3 days with these big red candles right here, huge volume. So the big traders, Wall Street wants to be out of this right now. I'm not sure. I don't know what the news is. Somebody else probably can make a comment about that. Looks like support might be down here around 33, 34, if it can hold. But if it doesn't hold, then it's probably going back down here to the lows at about 30. So that could be where it's headed. It's at 35 right now. Not a good look for DraftKings. Let's see. Intel, somebody said keep an eye on Intel. Yes, Intel continues to go up. It looks red today, but gapped higher, still up $37. So we'll see what happens. Could be some profit taking here soon too, but right now Intel looks really strong. CE, commodity chemicals, Celanese. Celanese is also a downtrend below the 200-day. Nothing good happens below the 200-day moving average. So I never like to see stocks. I usually put in many of my screens that it has to be above, at least has to be above the 200-day moving average. And it's below the 200, it's below the 50, just got above the 21 right there. But in general, it's below the cloud. In general, this is a downtrending stock. You can see the momentum is just put in a higher low, so it might be changing character. If we put in a support line down here, probably right, well, the main support is right down there for sure. So that's key support for this one, right down here at about 37. If it continues to go higher and makes a higher high, so it needs to get back up here around $47, $48, then that will be a change of character. So then we've got a higher low and a higher high. But it has a lot of work to do, a lot of overhead resistance, lots of people back here that want to get out at break even. So they're probably going to be selling when the price gets to somewhere in this area, somewhere in that general area. So that's at about $49. So you'll run into lots of sellers right there at $49. It's at 45 right now. So if you're looking for a value stock, maybe this is a good one to get into. Might not go down much further. It's not going to go out of business. Here's the weekly. You can see how and it looks like it could be a double bottom actually on the weekly. So this right down here around 40 might be a really good place to get in. This might start to climb back up, but it's got a lot of work to do still, but that could be a double bottom on that. Let's look at the monthly, go back even further. And yeah, it's down here. You can see the double bottom, and that puts the support right about there. So 37, 38 is where support is. That's pretty solid support. So it's probably going to hold right around there. So it's at 45 right now. Again, if you're looking for a value play, this might be a good one. It's not the kind of thing that I usually look for, but that's what it's even below the 200-month moving average, by the way. You can see right here. So that really has a lot of overhead resistance. There's a lot of sellers up here as it tries to make a comeback. All right, SNDX. Somebody said this is on the short squeeze list, and yes, it is. I noticed that yesterday. This is on the short squeeze list, so I don't know what the percentage of shorts. Let's go take a look. I haven't included this new list that I created on the website yet, but when I update these over the weekend, it will now include all of the shorts on here. FinViz list. These are all the ones that were on FinViz. So SNDX, let's go take a look. Actually, first I want to put it in edit mode. SNDX is right here. 27, almost 28% of the float is short. So that's not the worst case. You can see SoundHound is 32%. And what's interesting is if I go up here and sort on that, look at the one right here, 420% of the float is short. I don't even know how you do that. This is Carl Icahn's company, IEP, Icahn Enterprises. 400% of the float is short. Unbelievable. And this one right here, a biotech, 86% is short. So it's actually interesting. Here's Rocket that someone asked about last week, which is what caused me to start to question Schwab because their data looks like it's bad. But really interesting to take a look at these and just go through the list and get familiar with the names that are on here, because then when you see them pop up, you'll know that they are a short squeeze candidate. So this one right now, the important thing to watch is volume. So right now it's just putting in a base. It's in a squeeze. It probably won't have a short squeeze till it gets up above this level up here, which looks like about 17. And we need volume. So right back here, this is a good example. Right back here on this day right here, you see the volume down here. So that's where it would make the list. more than 125% of the average volume. It's moving up, so it would have made the list right here, and then it took off. So this right here is a short squeeze, but then now more shorts are probably shorting it, so it won't have another short squeeze until it's up above 17, in my opinion. All right, that's that one. All right, two more, and then I've got two things I really want to show you. The next two stocks that the same person asked me about these. The first one I'm going to look at is RCEL. So here's Avita Medical. It is a $5 stock, $5.50. And let's look at it for a full year. You can see it's just been in just a consistent downtrend. Yeah, sure, it has a nice little pop. So it went from about $4 to $7. So that right there is about 75% gain in one day if you had bought it down here. A lot of people that I'm going to make a comment about both of these stocks, and this is just my opinion, but it reminds me of when I first started learning how to trade. And I thought, well, if I can just find a low price stock, something around $5 or $3 or something like that, where I could buy like 1,000 shares. And then if it has a big, huge run, then I can make a lot of money. So that was the dream when I got into trading. And I didn't have a lot of money when I first started. So I'm like, let me just find these low price stocks. And if they really take off, make a ton of money because I can buy a lot of shares. So the key thing I was thinking about is two things: the number of shares, how many shares can I buy? And the second thing was how many dollars can this stock go up? How much money can I make if it goes up $2 or $3? So that was my thinking in the beginning. And that's what these two stocks remind me of. So let's go back to a weekly, and you can see right here, just continually going down. Goes down, it comes up to the 200, goes down, comes back to the 200, goes down again, and starts to move back up. So sure, if you catch it at the right time, and that's a big if, because these will have a lot of manipulation. When it has this big run like it did right here, then you'll see all kinds of notices out on the internet, and people will say, hey, this is it, going to the moon. The stock is taking off. And you'll start to believe them, and you'll buy it right there. And they're the ones that are selling. They're hoping that retail buyers will buy it, and they will start selling. And it just goes down and down and down. So it goes from $7 to $5. So that's the danger of these. If you catch it down here, sure, you can make some nice money. But what a lot of people also do is they make some nice money right there, and then they're like, well, it's at 7. Everyone on the internet is saying it's going to 20. Why don't I just hold it until it gets to 20? And then what happens is it comes right back down to $4 where it was before. I've seen this just over and over again with stocks like this. The other one is HUSA. You can see here, this is a $6 stock. Yeah, 650. So same kind of thing, just continually going down. That's what it looks like. Lots of red candles below all of its moving averages. If you look at it on a year basis, that was a huge run right here. So it went from about $4 right here up to $22. And that's what everyone will remember, muscle memory. And everyone on the internet that are pushing these things will say, hey, we're going back to 20. We're going to do it again. So get in right here. Well, they've already made their money. They're already out. They probably moved on to other stocks that they can start to push. And it might just sit down here at $6 for years. And especially if you bought it up here when all the hype, everyone was talking about it. And you come down, you bought it at 20 up here, and it's come down to 6. And you're thinking, I just want to break even when it gets back to 20. And it may never get there. It may stay at 6 for years. Believe me, I've been through this. I've done it myself. And finally, I just said, that's it. I'm out. And I sold off. Other things happen with low price stocks like this. Like when they have a big run like this, then the company issues more shares because that's how they make money, how the stakeholders in the company make money. So they issue more shares, they dilute the stock, and the stock drops as a result. Happens all the time with these low price stocks. So it's basically a gamble. So you go into the roulette wheel, putting your money down. Sometimes you might win. More often than not, you'll end up, your money will just slowly decay. Every once in a while, you'll get a big winner, and that will keep you coming back to the roulette table. But that's just my opinion. Sorry to put it so bluntly, but that's my opinion on these two. When I looked at them, I thought, oh, I remember looking at stocks like this. Stock's $5, $6, hoping it will go to 20. I remember that. Well, I don't do that anymore. But it certainly is a good lesson, good way to learn. And as John Carter said in his book, there are 3 phases of a trader. Phase 1, lose all your money. So in each phase takes about 2 years to figure it out. So phase 1 is lose all your money. Phase 2, stop losing all your money. Phase 3, start making money. So that's my comment about these particular ones. I'd rather get into ones that have lots of action, have lots of volume. By the way, let me look at the volume on these. That's actually a good question too. Let's see where I have volume. Volume down here. Looks like 221,000 average volume on this one, which isn't too bad, but it's a $6 stock, remember. So RCEL volume on this one is 1.2 million. So that's pretty decent volume on that one as well. But sometimes I see volume down here in stocks like this, stocks that are selling for $2 and the volume is, 20,000 shares. And it's like 20,000 shares at $2, that's $40,000. I mean, anybody that has a decent sized portfolio could buy all the shares, buy them all. Then who are you going to sell them to? You can't sell them to yourself. So that's why volume is so critically important. Any of these low price stocks, if you do want to try to pursue these, make a point of looking at how big the volume is. You'd like for it to be over $1 million for stocks like this. So just another warning. All right, 2 things I want to show you. First off is silver. Something very interesting about silver that I saw that I want to show you guys. So here's silver. I'm going to go back. First, I want to remove all the indicators, take all this off. And then I'm going to go back 20 years. Let's make this impulse system. Let's go back 20 years. So there's silver over 20 years. And now I'm going to I want to do this on a weekly. So this is a weekly chart over 20 years. And you can see right there, silver right now, let's see where the high was back here. The high was 49.51 and the high today is 48.06. So almost, not quite there, but almost there, almost at the high. So let me put one more indicator on here. And this is very enlightening. Let's put the relative strength indicator on here. This is a 14-week, so it's a weekly chart. So it's a 14-week relative strength indicator. And make it a little bigger. So that's what it looks like. So there's silver at the top, and here's the relative strength indicator at the bottom. So the next thing I want to do is, let's actually go back 25 years. All right, there's 25 years. So I want to put, every time that this goes over 70. So over 70 means it's very overbought. But when it gets up to over 80, in fact, I can actually put this on here, put a horizontal line at 80 and make it red. So you see every time it gets over 80, it's extremely overbought. By the way, it's there right now. So let's take a look at each time that happened. It's not a lot over 25 years, not too many times that that's happened, but let's take a look. All right, here's one. Here's one. Here's one. And notice as I'm doing this, notice where the price is in each of these cases. Here's one right here, over 80. This one's over 80. And we are over 80 right now, although it has not peaked yet. But I'll put a line there anyway. All right, they're the ones over 80. Now, there's one right here that's almost 80. It's not quite over it. So let's put one there too, just for fun. And we'll put one here that looks like it's at about 75. All right, so there are all the times when silver has been extremely overbought. I don't really need to talk too much more about this. Just take a look. You can see for yourself what happens over the last 25 years. 1, 2, 3, 4, 5, 6, 7. Actually, minus these two. 1, 2, 3, 4, 5. 5 times, and this time makes 6. 6 times over 25 years has the RSI been over 80. And you can see what happens, where that is in each of those cases. See what happens to the price right after that. Now, does that mean that's going to happen again? No, it doesn't mean it has to. It could just keep on going. It could stay over 80 for a long time. It could stay over 80 and then pull back. But historically, it's pretty interesting that when it gets to that point, that's what happens. There is a decline in the price. Sometimes it's an extended decline. Sometimes it's just short term. This was a pretty steep decline back here, but it was short term. This one here was a short term decline. But I just wanted to show that to everyone. A very interesting idea, something I saw on a video yesterday. So I wanted to point that out. Very interesting. All right, the last thing I want to show you is lots of talk about the shutdown, of course, and comparisons with the 2018 shutdown. And maybe we are doing in the same situation. In 2018, in Q4 was the last Q4 that was negative, was 2018. So does that mean the shutdown is going to turn into a negative Q4 for us again? Well, just like I showed you, we are very bullish right now. Even with a little bit of a pullback today, it's still extremely bullish. So let's take a look at 2018. I put a chart together to show you what that looks like. And let me make this a little bit bigger. All right. So this is 2018. This is not 2025, but this is October 3rd, 2018, where it says you are here. That's October 3rd. Now, what I want you to take away from this is that it is a very different situation right now than we had in 2018. First off, the market had been on a bullish streak ever since the 2016 election. So almost just continuing to go up, much like we're doing now. We had a pullback here in March into the first week of April. Does that look familiar? Just like we did this year. However, at that time, the Fed was hiking rates at 25 basis points each. So these pink lines are each time that the Fed's hiked. The first one was in March, and then in June. Market didn't really do much. And then tariffs started. Then we had a trade war with China that started in July. We had 3 tariff situations. First one was July, the next one was in August. And with 2 rate hikes and 2 tariffs, the market still continued to go higher until we got here in September. And we got another big tariff and another rate hike. So both of those things back to back, the market said, that's it, that's enough. And October 3rd was we're right near the high. Market started to sell off all the way into the end of the year. And as the market sold off, mostly related to the tariffs, but also to rate hikes. Remember, we're going through rate cuts right now. And then we got down here to December rather. It was actually December 22nd, right here where the government shutdown is. Government shutdown started on December the 22nd, and it went till January the 25th. So December 22nd, when the shutdown started, was the absolute bottom of this big sell-off. We had one more rate hike right here in December. And at that meeting, the Fed said, that's it, we're done with hikes, and probably we're going to start cutting next year. And based on that narrative, just 2 days later, the market hit bottom and then took off and didn't look back right into 2019, up into 2020 until we got to the pandemic. So this is the government shutdown. Government shutdown in 2018 actually began almost to the day when the rally started. So keep this in mind. I'm going to put this in this weekend's newsletter. It is a very different situation in 2018 than what we have right now. So just keep that in mind if when you hear all of the noise on the internet and different people talking about the government shutdown or what happened in 2018. By the way, this was the longest one in history, 35 days, this shutdown. So we'll see what happens this time. But just wanted to point this out just from a historical view to show you what actually happened back then in 2018. All right, that's it for today. Thanks for watching. Hope everybody has a great weekend. It is 3:06 right now. Let's go take a look at what the market is doing at the moment. We got less than an hour till the close. Looks like it's just kind of sitting at the lows right now. There's the S&P sitting at the lows. So looks like the market wants to go into the weekend, taking some profits, taking some profits with them into the weekend. Still a bullish week and still very bullish overall. And the other thing that was really interesting today when I updated, we go to the market bias page for subscribers. When I updated the flip lines, the flip lines actually dropped quite a bit on the S&P and the NASDAQ. They went down a lot. They were actually way up here, right below where the price was yesterday. These get recalculated at 8:30 at night Eastern time. So this actually fell quite a bit. So what that means is this is a rally. So market makers will often sell the rallies and buy the dips. We've got a spinning top candle right now with less than an hour to go. That is a reversal, indecision basically. That's what that means. So wouldn't take much for it to go right back down to the 21 next week. That wouldn't surprise me at all. If we look at the NASDAQ 100, same thing. Flip line actually went way lower, way down here. It was way up here. So went all the way down there. However, on the Russell 2000, the flip line actually went up. So there you can see is a shooting star candle right now. It's above the flip line, but the flip line actually increased, actually went higher. So we'll see what happens. At the end of the day, it looks like we're probably going to hang out right about where we are right now. One other thing, but this one right in the middle shows you the dollar. So somebody asked about the dollar as well. Dollar continues to go down. I put the squeeze indicator right here on the dollar chart as well. You can see gold going up, and the 10-year continues to move lower. The 10-year, and this is something else that I hear people talking about, and it's really funny when I hear this. They talk about the dollar and they talk about oil, and both of those are going down. The 10-year is going down, and all that is terrible. It's bad. The economy is going to crash because that's happening. Well, I've talked about this before, and I put a chart in here, a liquidity chart. I think this is it. Yeah. All right, liquidity, global liquidity. If the dollar is going lower, that improves global liquidity. More than 60% of countries denominate their currencies in the dollar. If the dollar is dropping, that means they can refinance their debt with cheaper dollars. And that puts more liquidity into the global system. When oil goes down, that means they have more liquidity. They have more money. They don't have to spend it on energy. They can spend it on other things. Commodities too. Commodities are ticking up slightly, but the 10-year yield is also going down, making money cheaper. So all of these things add to global liquidity. And where do you think that liquidity goes to? That's right, into assets, into gold and silver and stocks. That's where it goes. So when you hear people talking about the US dollar is crashing and it's going to be really bad for the economy, understand what all that means. That the dollar going down actually is good for global liquidity. Here's a 40-year chart of the dollar. Notice it's still above the midpoint, going back to 1985, 1986 back here. The dollar is still at the midpoint. Sure, it's come down quite a bit, but it has a long way to go before it gets back to the lows. So it is only basically right in the middle where it's been for the last 40 years, which is also true of mortgage rates. Here's 35-year mortgage rates. They're actually a little bit lower than the midpoint. So this red dotted line right here is the midpoint going back to 1990. So here's mortgages, 30-year mortgages and 10-year yield. They're actually lower than the midpoint going back 35 years. So keep things in perspective. When people say that mortgage rates are way too high, yeah, maybe they are, especially for those that have lived through the last 15 years that have never lived through high mortgage rates. They don't think that being a less than midpoint is a good thing. They think that's way too high, but it's not. This is normal. We're basically at a normal period right now. Anyway, got off on a tangent on these things, but let me know what you think. Please like and subscribe, and let me know if you have any questions, comments, or anything you would like for me to look at. Thanks for watching and have a great weekend, and I'll talk to you Monday.